Okay, guys, just let me know if you can hear me coming through. I forgot to press the go live, the start streaming button. G'day, Paul. G'day, Peter. G'day, Farrow. All right. I'm guessing you can hear me loud and clear, and then we'll get stuck into it. All good. Fantastic. All right, guys, welcome. Welcome to TradeSetup, the live stream. It's the 10th of December. I hope we all had a good weekend. It might not have been so good if you got up Saturday morning and looked at the markets, but it is what it is at the moment. A lot of fear out there at the moment. The markets are getting driven down in the US, and that's just dragging us lower, even though we're not doing too much. But anyway, um, all right, what we're going to do today is obviously just go through the markets, but we're going to leave it a bit open today. I haven't got much in the way of stocks, obviously, to talk about. Um, there's not too much happening. There's a few that are picking up. We might take a look at some gold stocks because obviously the the Aussie dollar is getting sold down on the RBA, or the potential. Everyone's sort of maybe factoring that there could be a rate cut rather than a rate rise in the near future, which is going to obviously drive the Aussie dollar down, and gold in terms, obviously gold's rallying as well, but gold in terms of Aussie dollars is going quite well. So we'll take a look at that maybe and just see what the gold stocks. I mean, gold stocks are opened up today. I think they're all trading relatively strong. But yeah, our markets well and truly on the back foot at the moment, and it's got hammered a lot more than I thought, to be honest. All right, g'day, Gino. Now let's minimize that. Oh, actually, before I go too far, anyone that's new, there's a few that have heard this a few times. Anyone that's new, the top left-hand corner, you'll see us at Twitter. It'd be appreciated if you can join us at Twitter, and anything you do like, or anything you do see that you do like, just give us a retweet or a like or whatever you call it up there. Facebook, the top right-hand corner, they're very similar. Twitter's the one we're mostly active on. The bottom right, just subscribe to us at YouTube. All right, and we just had our general advice warning smack in the middle. Now let's minimize that, and let's go to sort of do first and I transition. There you go, the screen should be right now. G'day, Helen. So let's just start by looking at the indices. Where are we now? 55.77 down 104, so it's just dropped off, which is a shame. So I was short the SPY a minute ago. Yep, I was short the SPY, so no, I had to close that out, but not had a great day on the index anyway today. Missed a short originally, and then got stopped out on a long. Was in my favour for a little while, but stopped out there, and then a couple more longs, and I've been chasing my tail, sort of buying and selling and making it back, but pretty much, I guess, break even at the moment. That last sort of one would have tipped me over into positive territory, but here's what it is. Now let's just look at the XJO. Let's take a bit of a gander at that. I think we have to go obviously right back out to this weekly chart. Make that thick. Let me just get up. I mean, not much has changed. There's still a lot of fear out there at the moment. No one really wants to hold too much risk into the market, and if they are one day, they're out the next. Actually, let me just make that chart better. That's the one, is it? No, index. That's the one. Weekly. There we go. So we still have, not much has changed since our on Thursday. We've still got a zone through here. Actually, let me draw that up better. So we've still got a zone through here, and the market's just tipping through that zone at the moment. We might have, you can see that the market's just searching for sort of some bids at the moment. Whereas, like I said, if it's searching for a bid, a reason to buy, a zone to buy up off. At the moment, there's just nothing. There's nothing around at the moment. Like I said, if you're not out of the market at the moment, or you minimised or reduce your position significantly, then you're probably going to be under pressure, and we never know when that pressure is going to stop. And I think the two things by doing that, what you're doing is minimise your risk to the market, any movement down. But what you're also doing, even if you have to take a couple of losses, just remember that when the market does start to bounce, you're in a position to pick up some good quality stocks that are starting to set up and setting up quite well. So you might look, I mean, you might take a bit of a hit just by closing out. I mean, this is probably when we're talking back up here, when the market was at 51, what was it, 61, sorry, 6100, 6150 or so. The market was trading back up there. If you started edging out, looking at this big push down and then this is a lower highs, you go, okay, this could roll over quite good. We don't know what's going to happen. Everyone was expecting the US to tip over back then. It's just a matter of time till something triggered that selling pressure, which we've got in the last few months. So yeah, if you didn't tip out there and you're holding a whole lot of positions here, I mean, yeah, you could do that. Obviously, you can do that on stocks. We've got this market, which you can see here, got knocked down. So what we're trying to find is a bid zone. Now, if you're holding, like I said, all your positions still, or you're holding a lot of the bulk of your portfolio is still into the market, then I'd assume there are a lot of them will be against you. You don't know how much further they're going to go against you, and you're using up, you're using up your cash reserves, I guess, that could be put to use if we do start finding the bottom here, if we do start working off this bottom here. So, yeah, I'm a big, as you know, a big advocate of using stops in the market and just taking it off. You can always get back in if you find out that you're wrong, or your exit was wrong, or too tight, or whatever it is. And you might have to give up a few gains or take a small loss initially, but that's the cost of safety, I guess. And it's proven its point the last a couple of weeks, a few months, and we got sold off from down. What are we now? 500-point sell-off. So not too flash. So either way, we've got a bid zone potentially just through here. I was looking around the 56, 50 to 57, holding up above there, but it's still stretching into that 56, just below 56 at the moment. 55, 78. So look, it is stretched. You can see the stochastics are stretched into that zone. Not saying it's time to buy, but it's also not, I wouldn't assume time to sell just yet. I mean, it's a hard one. You got to preempt these rollovers, and if you do get a rollover, like you're looking up here, taking off, great, it's worked out in your favor, and then just searching for a bit of a buy entry or the market to start finding some support. Now we could do this where the market grinds in. That was looking a bit negative, ready to break. It just took out the lows a couple of times and then pop up she goes. Different scenario just here. I think it's got a lot of work to do. I think to push up off that support, we might wash it out a few times. We might come back in and then wash it out again and then start to find. I'd want to see this type of scenario where you can find that the buyers, they've been buying, starting to step in at the level. Let everyone else do the hard yards. Let everyone else buy it off support. And then once you've got your confirmation, then you can get in. If we get some buying off that support, the longer it takes, the longer this level holds up, the longer it gets tested and rejected. Yeah, if that's what's going to happen, that's where we're going to start to look for longs, as opposed to trying to buy off support and you find out, instead of this, we get this type of scenario comes up and retests and then boom, off she goes. We could end up right down to 51. Who knows? But yeah, it is a zone that people are watching. At the moment, they're still selling into that zone. There's not much really buying. Anyone that did buy it off the last couple of days, bought it off this bounce, potentially bought it in here where it rejected a couple of weeks ago, then yeah, they're starting to feel a bit more pain at the moment. Let's look at the Dow also. Look at the daily. If that data's come through, just give me a second. I'll just get the markets up here. Not the DAX. I want the Dow. There we go. So that's your week. That's your daily. So that was Friday, wasn't it? Yep, servants done. Okay, so that's your weekly chart there. It is holding up above 24. So I wouldn't suggest that we're gonna. I think this move down here, obviously, when the market opens, you've got all your retail investors just watching it all over the weekend, stressing they're behind the eight ball. Like I said, they didn't get out above. They got positions that are underwater. They don't want to take any more heat. You can't sort of stand the pain. They'll look at it on the open, get out and bail. Any sort of, then the people might hold it a bit longer. Of course, it starts going down. They start bailing. What I'm saying is that you're going to get that big washout, that big flush out on the open, like what we saw. Look at the intraday chart. Oh no, sorry. Oh, no, we'll look at the intraday. I'm just going to look at the intraday chart on the XJO. Okay, so that's a 5 minute. You can see that big flush down, and we started to get that buying off that zone there, and it started to head back down and into that 55, 80. So I'd expect it to chop around here. I don't expect it to bounce hard. It would have done it by now. It would have trapped a lot of traders on the short side, trapped them as it bounced back up, but instead it's flushed out a lot of traders, and it might just be, look, we could hold up and support down here. We don't know what's going to happen. That's the 30-minute chart. You can see that clear level at 56 is taken out. If we can bounce up there, finish above there into the close, who knows what's going to happen over the next few days. All I'm saying is I wouldn't expect anyway, um, our market to lead the US lower. I would expect, if they're going to open up weaker tonight and drive down through, I think the key levels around that 24, which you can do in one night. A good close of another 600 points lower to be down at 20. We're talking 23,800 to just close below this recent low. And then we might find some severe weakness. But what you've seen is this trend. Let's just see if the actual support zones are still intact. All right, line done. Let's go through here. So it's teetering. That's my weekly chart. What I'm seeing on the S&P. Got a lot of traders flushed out from those highs. When it got through those highs, made new highs, and then boom, that's where we began that sell-off. That was the original seller. So we do have, don't forget, we do have a double top up here, which could lead to further selling. We do have a key support down at 23.5 with a little mine level, which is hovering around that 24,000 mark. Hasn't got through there yet. There has been a lot of volatility, a lot of chop, and every time you get these big down days, it's going to flush out a lot of traders on the buy side who have been stacking up, who thought maybe they bought it up off that support the first time, looking good, bang. Okay, they got flushed out there. You got this green week, this green candle. You can see that was a weekly candle. Buying up off their support, it's opened up, bang, flushed back out again. So that has dragging a lot of traders, and it's just really rinsing them through the market. So that's not a good thing if you're getting rinsed through the market, and if you're trying to just anticipate what's going on. But all in all, that weekly chart, that's still holding up on the Dow on your top 30. And that's really well and truly linked to what's happening over in China and with the tariffs, China and the US. Now, it'll be interesting to see. I don't think there's any news, correct me if I'm wrong, anyone, if there's any news that's come out further on this Canadian arrest or that Chinese delegate from Hawaii, Hawaii, I can't say it, who's getting expedited to the US. If anyone knows some more news of China have come out and made a statement on the back of that over the weekend. I didn't really look, but it'd be interesting to see how that plays out because I think if they come out and say too much, like I don't know, everything could flare up again, and I think that's what everyone's expecting with this big sell-off on Friday. Maybe they're expecting that's going to flare up. There's going to be tensions again. The US have come out on Friday and did say, all right, we've got the 1st of March deadline, and then tariffs are coming on. If China hasn't done anything there, they haven't got their act together, then bang, tariffs are going on from the 1st of March, from probably 10 to 25% as usual, I guess. But yeah, I mean, they're still playing hardball, especially with what's come out with that arrest. Also, on Friday, which I forgot to mention, was payrolls. Payrolls are slowly edging lower, which really supports the fact that there's not going to be too many more. Instead of 4 next year, maybe 2 rate rises, maybe 1. Maybe they really back off on the rate rises for next year in the US. 1 more coming soon, I'd say. Another rate rise due December before the end of the year, before Chrissy. And that's well and truly factored in. But any further rate rises were anyone that's factoring in 4, maybe 3, has had to readjust in the US dollar. And the US dollar's pushing lower. It's not severely getting knocked around a bit, but it is putting pressure on any sort of rate rise. Anyone sort of readjusting is putting pressure on the downside in the US. It is still a bit choppy, so that's putting pressure on the overall market. And we had numbers just come out. I think it was weaker than expected. Instead of 200,000 new jobs, it's only 100 and something thousand new jobs. I mean, still growth, but the growth is slowing. Everything's slowing over there. And if they do come out with more tariffs on the 1st of March, bump that up, you wouldn't expect that growth to go. You'd expect it to go one way, to really contract a bit further, a bit harder. But we'll see. So that's the US, the S&P. I mean, that's a weekly trend. If you're in there on the daily, look at that. I mean, that's really choppy. support off here. It needs to hold up around that 24. Might wash out that zone, pop back up. It's more of that finish above 24, and if we can start to lift again, it would be interesting. But these, you can see that big move lower, rejection, strong move back into that zone, another rejection, but you've got the lower high just in play at the moment. So the market since October is still down, it's still trending down. We've still got that fear. Everything's still trying to get worked out, but they are flushing the market around. Now, the bigger picture, so we go to the S&P, yeah, it's slightly different. If you take it from that low there as well, it's pretty much trending lower, but that lower high is yet to confirm just yet. So that's your bigger picture. Unlike the Dow, it has broken through. We've broken through. We've got essentially our double top, maybe a massive correction, corrective phase. But again, to confirm that, we've got to get through 26, and it hasn't quite got there yet. I mean, it's only, what are we now? 33 points, 26.33. I think it closed it on Friday on the S&P 500, the bigger index. It is stretched into that zone, you could see. So there's going to be, when we say it's stretched into that zone, I know there's two things. When you've got an orderly market, when the market can grind into a level, that's okay. But when it's just the fear driven, the fact that it is stretched in here doesn't mean as much as it would in the other scenario. When you get the other scenario, it is grinding low and it gets stretched. You've got to look at it like, okay, how many more sellers to press into that support? Have we used up all the selling fuel? Okay, we could be looking to buy, look for your higher low, up we go. Instead, when you've got a fear market, this could just plow straight through in one night. You're down another 60 points. We're down from 33 to 50, say 60, 25, 50 or 60. We've plowed through that. Lower highs in place, really negative market. And that's really starting to drag the overall market, or the Dow, that'll drag the Dow lower. But again, this thing could just chop around sideways between 26 and that 28, bounce around in between there while the Dow holds up. If it starts to hold a higher low, we might start to look back up towards 28 and even lifting through 28. But again, there's still a lot to go. Europe, I think, where are we in Europe? Bit of rubbish there. Why am I not getting, oh, end of day, there we go. FTSE, just go straight to the weekly. That's rolling over. There's not much to look at there because there's no real, you have to go right back from the monthly, and I think that's still holding up. You can see, draw a line across from support to support. You're coming somewhere around 65, so there still might be a bit of downside. Even if the US holds up, there could be still some downside in the DAX. Oh, sorry, this is the FTSE. Don't forget they're having problems with their Brexit at the moment. Some serious problems at the moment. DAX is still trending lower, and if we go back to the monthly, that could be finding some support. I mean, that longer term uptrend, it's just flushing out a lot. They might be, who knows, to the end of this flush out in the DAX. It's still well and truly trending down. You wouldn't buy or sell down here if you're on the DAX off your daily or your weekly. You can see that the weekly's holding the, well, every time we look at, if you're looking for a negative market, you've got the EMAs or the moving averages rolling over. Every time you pull back and it starts holding the EMAs, whatever you use, simple, exponential. I use a 20 and 50. Dav on the stairs uses a lot of the 33 and the simple. It's all a similar type of thing. If you pull back to the EMAs, you're holding that trend. And it starts to roll over again, that's looking like it's going to take out the most recent lows and then just plow on lower, which it has done on the DAX. That's your moving back to the MA, bang, straight down through 11,000. If you go back to the daily is still doing pretty much the same thing. Roll over, push below the MAs, pop back up, started to find support from or resistance at the MAs there, pop lower, back up, stronger move lower, back up to the MAs, bang, back up, bang. So it's still holding that trend down until that changes and we start to push back up and take out a few of those lower highs in the DAX. That trend is still down. So that's it. Let's just take a look at, I just want to take a quick look at gold stocks. Let's just see. Any questions just on that, guys, what we're looking at? There's no hurry to start jumping into the market at the moment. We're still well and truly under pressure, down 100 at the moment. I wouldn't have thought, like I said. I was expecting more, down 30 or so. And we really added to that. Another 60 or 70 points got slammed on the open. So that fear is well and truly fear driven on our market. Just enjoying my coffee. Sorry, guys. A bit of slurping. What am I looking for? Gold. What are we on? So on the daily, this is DCN. Just look at. There's not much happening. I mean, actually, let's just look at. This is the gold. That's not. Right, let's just try that again. I'll get back. GOLD. That's your ETF or your ETF on the ASX. GOLD. I don't know if that's physical gold stocks or producers or exactly, but there's two of them, GOLD and XGD, I think it is, which we'll take a look at in a sec. You see that's still choppy. So if you're looking at gold stocks, just be wary that maybe we're at the top, we're coming to the top end of the range on GOLD, and we're finding support. So the market longer term on that weekly is contracting. You've got, so I'm not expecting a massive move up on gold anytime soon. It's more, I would play more range trading on gold at the moment, is the way I see it. And especially when you've got these little stocks that, the ETF still stuck. I mean, it has popped up the last couple of weeks, but that could easily get knocked on the head when you get the Aussie overextended, gold sells off, and they reverse. And of course, this will be starting to head south again. But we'll see, and it is extended up here. It hasn't reached, the last time it was extended up in overbought territory on the stochastics. It was up at 16.6. Can't quite get there. It seems to be running out of steam a bit earlier. So for me, that reads to me as more of a lower high coming into play. It is. I mean, you can see it's ever so slowly grinding up, but it's still holding lower highs. This is your high. This is way back in 2011. The most recent lower high, which coming to play, probably a double top, you could say, just below 18,000. And then we've got lower highs coming into play again. We still got that grinding back up. It's coming to that point of agreement, but I'd still be tentative about taking any gold stocks just off that chart. Let's look at the XGD. Now, XGD is, I think it's your gold stocks, your underlying gold stocks. You can just Google it. That's XGD. So on the daily, that's obviously looks quite good. I mean, you've had that pop up, that contraction, another pop up. You've taken just today, you've taken out the most recent lower high around 50.50. That's looking quite positive. But if you just back to I'll draw this up. Actually, I want to draw this up because I think it's interesting just to keep a note of. So what we're saying, that's your XGG, your gold sector, your sub-industry, whatever you want to call it, is the gold index. Yep. So you've got the daily not looking too bad. You've got this pullback, press up, pullback, and it's starting to show that it's going to hold a high low. Yeah, it could do, but you've also got this type of structure when it's come in, it's fallen away, and we've still got this holding in place through here. So it could just be getting up, maybe retest those highs, and then this longer term contraction. It's still, and especially after it's broken down here, this could be a major lower high coming to play, and then from here you just start heading south. Take out that low, bigger contraction back down to 4,000. Just picking a line in the sand there. But you can see that could be another 1,000 points. So, I mean, who's to say what's going to happen just yet? But yeah, we'll just have to see. I'm still tentative on looking at any sort of gold stocks. And if we go back down and drill down onto, I've only got a few of them on my list. We'll go to the weekly. It's the weekly. So this is DCN. That's rolling over. You've got this big press up, pullback, pressed up again, got to overbought territory. Last time it really kicked on. So that's showing some serious weakness. And the way it rallied too was more of a gradual move up as opposed to this original, back in 2016, it really started to take off. And then it's rolled over since, and it's still holding. And that's your perfect example of what we just said: reversion to the mean. Markets crossed below the MAs, pop back up. That's your first pullback to the MAs, and it's been sold down since on the weekly anyway. I mean, the daily doesn't look much chop as well. So that's DCN, SAR, so Saracen. It's pretty much reverse. It's popping up. It's extended on the upside. I wouldn't be buying that. For me, I wouldn't go near that just at the moment. And you can see it on the monthly. Spike up, pull back, reversion to the mean, bang. So it's maybe the tail end of a move up. Again, we just have to wait and see what happens. And you can see on the weekly too, it's getting a bit ahead of itself. It's popped up to the top side. Only today, it can't really go on with it. It's taken out the previous high at 267. It's about there now. 267 offered, so 266.67. So it's popped out through those highs. This could, I mean, I would never buy something like this when you've got the stochastics in overbought. It has. I'll be looking more for the weekly for that reversion to the mean, that pullback to the MAs. If it's going to stall at the MAs, start to hold, then drop it down to your daily to potentially buy from. Something like this type of setup, that would be ideal. Northern Star. So just chucking some, while we're at it, guys, just chucking some codes, some stocks to you if you want to take a look at. And I'll just keep plugging through these gold. I think it's interesting to look at. That's Northern Star. Again, look, that to me is more chopped than anything else. If we go back to the weekly, that could just be lifting. If it's lifting off the MAs on the weekly, I'd rather see a retest, a high low build, as opposed to just a V-shaped recovery. I would never buy that because my risk has to be down at 760, and I've got no confirmation at all, for me anyway, that it's going to lift. It could hover around, chop around here above 820, 840, hold the MA. Sorry, the MA start to lift again. It's holding above the MAs. We've got a higher low that's starting to build, and then buy it off the daily when it breaks up and through, looking for a push up through 940. Fine, that could play out. The weekly's up. It has just that reversion to the mean at $8, so give or take, around $8. But I would need, just for my trading, especially this type of market, maybe gold, maybe the Aussie dollar's extended down, maybe gold is extended up. And if they reverse, then you'd find these little gold specky stocks will pull back as well. I'm not Northern Star as such, but gold might take a bit of a hit, and these stocks might get sold into. What was the other one? EVN. Do we just go through that? No, we'll get through that in a little minute. SPM doesn't look too bad. Obviously, you got this big press lower, so that's probably what we were just talking about with Saracen. Oh, no, sorry, Northern Star. If we can hold like that, look at the weekly. If we get something like that, it's pressed through back above the MAs, chops around above the MAs, holds, and then starts to lift, and we got a clear entry with our clear risk, and we know exactly where we're going to put our risk, and we're looking for that move up to equal that move up, for a move up to potentially above 5 on this one anyway, on Santa Barbara Limited, SBM. So yeah, but that trend is up, and it looks like it gets choppy. I mean, I find this hard. That at that stage, if you look back in 2017, press lower, chop back up, looked like it was going to roll, and then bang, up we go with a new leg higher. But still, it kept reverting back to the mean. If you're trading that from the daily entries, look, you may or may not have been chopped around, but I think all in all, you would have done quite well on that. We may get a bit of the same on that, on SBM. Oz, was this one that I didn't mind. Oz off the daily, wouldn't touch it long, just here. The only reason you'd be touching it long is because it's pressing down into this zone around 820. But if you look at that zone at 820, there's no reason why it can't be off a lower high on the weekly. And it can press down and then reversion to the mean, as in your first sort of pull back to the MAs in a downtrend, and it gets sold into. So if you're buying it here, you could get flushed out with a move to 750, for instance. Does that make sense? Because you can see the MAs just starting to roll. We've got this sort of two-legged move down. It pressed back up just below $10, struggled around $10, and we're starting to head south again. So I'm not too confident on Oz. If we go over to, don't worry about this one really. That's AQG, EVN. Let's take a look at EVN. It's a bit along the same lines as Sharon. Similar top lines as what did we just look at? Northern Star. You can see. No, it's not. No, what am I talking about? Oz. Let's try it again. SBM. That's what I'm looking for. So that type of move is very much similar to what we're seeing on Evolution. If we just go back to the weekly, again, I would still struggle taking that, and that's my mentality. That's my trading style. I'm looking at this more, maybe how much more room we got left to rally. The weekly starting to get extended, the daily sitting extended territory. We're coming up into a resistance zone at 350. Yeah, it could be wrong. Could just keep going. I just can't see it in this type of market at the moment. I mean, if the ASX holds up, gold drops like a stone because the US bounces, then you get these ones that probably start to come off a bit. But we'll see. But again, that weekly trend is up, and we've got that reversion to the mean style back to $3. It pressed back up from below the MAs back to above. They didn't cross, and that's a good thing too. You can see we had this big flush, and then we started to hold. The MAs come back in again, but they were still the way I look at it, I want the 20 to be above the 50 and start to expand again. And you can see when they start to expand, it's quite clear cut, the MAs, and then you're just looking for your daily entry back to your MAs, and up we go. So can you see what I mean by, let's just get into this one. When I look at, if you can see the MAs, sorry, whoops. The MA is expanding here, they're expanding here, all through this move here. Whereas here, they were a bit choppy. They really didn't contract too much, but they didn't really expand in here either. It was only until we got sort of this press up and we got a decent higher low, this one started to hold. You just get by stepping in at higher levels rather than, what we saw through here. We're going to pop up, not a bad contraction, pop up to the highs, deeper contraction, wash out the highs, straight back down again. So if that was, you're going to buy through here, you would have been looking for a higher low to hold at higher levels. Instead, we come all the way back down to MAs around that 210 mark, started to lift, took out the highs again, straight back down. So the pullbacks were quite deep. It's not showing a sign of strength just then. Up until we held this little pullback, sat straight on top of the MAs on the weekly, we lifted, come back down to the MAs, and then you can see that in conjunction to that, you started to get these, the weekly MAs lifting. So that's ideally what you want to look at, and then look for your entry off there. And that probably would have been a prime entry through 270. Took a bit of heat on this week after a little pop. That, of course, that was coming straight into a resistance zone at $3. But then it started lifting. You got this press up into 360. So that turned out quite well. However you got out, it was up to you. You might have taken a quick, maybe a partial exit somewhere here, stop out on this pullback, or a bigger stop out just above 3. But either way, you gave yourself some room to move. The trade was good, but you're looking at different price action just in here as opposed to what we're seeing in this chop. So the volatility has also come out of the market, and I like the volatility coming out of the market because it's getting set. And if it's still holding higher lows, it's getting set. It just means that when the volatilities come out, that argy-bargy between the buyers and sellers is starting to run out. So the fuel from selling is starting to run out. All right. So if they're starting to run out, what's going to happen? And then all of a sudden, the buyers it's perking their interest. Anyone that's wanting to buy can't wait till you get this pullback to, just below the MAs like we did. Let me just draw that in a different color, like we did here, like we did here, like we did here. They couldn't wait for that. They have to buy it because it's just stalling, and they're getting this little pop up here. So that was your first heads up. They may be waiting for it to get back down to 220 here, but instead we held up in the MAs. They missed that entry. They saw this pullback. Maybe the same thing happened. Let's just buy it on the break. Buy it on the break. We've got our stop low here, and away we go. So you can see, just interpreting that price action, you can see that selling pressure through a lack of volatility, if I can say it, you can see that selling pressure has been used up. They tried to sell it right through here, good part of all of 2017, and it just run out of steam. Does that make sense? Just what we're seeing on EVN. But all in all, if I can just do a new chart and just see where we're at the moment. Ideally, what I'd like to see, I don't like. I sort of feel like this is the first we've just done this type of stage, and we haven't put enough work like we've seen. We saw a lot of work put in through 2017, building that base. The longer that held, the better this move up is going to be. Okay, we haven't seen anything yet. So far we've got a couple of weeks of consolidation. So before we start to break, so if this is going to go higher, I would expect something like this, maybe a pullback, test these lows at down here at 290. I mean, if it's going to lift, I'm not going to be on it anyway because it hasn't set up for me, and I didn't take that entry through 220, for instance, or sorry, 320 or 325. So for me, I don't believe this is going to lead to too much of a move. We might stall here, have a deep correction. I mean, who knows what's going to play out just yet? But all in all, that trend you can see is up. So we might just chop around, and you can also revert to the mean by going sideways. Don't forget, you let the MAs catch up. We could chop around here between 3 and 320, chop around, and then a clearer entry starts to play out when you've got more price action to work from. All right. So I hope that makes sense there, Sharon. On the daily, if you click it down to the daily, I mean, the weekly's heading higher. You've got this little pop up through resistance. It is extended on the weekly. If you go into the daily, we're extended territory as well. So if you're looking at that way and you're actually long and in front, look, I don't know what you want to do. You might want to tighten your stop up, reduce your risk, because if we do have a pullback, and don't forget we could snap back on gold and the Aussie, snap back on those. We're going to be snapping back on EVN, by the way. So yeah, if we do sort of reversion to the mean, we could just pull back, hold 320, and up we go through 330, and then it's on. Then it could be working out quite nice, and you got to move up to 350. So you don't want to cut anything out, of course, because you want to give it some room on the upside. There could be still a lot more downside move on the Aussie, um, along with a further rally in gold as the fear creeps into the market. So at the moment, everything's saying hold. The daily's up, the weekly's up. It's just they're getting extended. So how much more fuel's on the sideline ready to push back in to jump into EVN at these levels? Anyway, anything else, guys? Otherwise, we'll just quickly. Newcrest is one that I like. Newcrest. I don't know. Look, I obviously don't know too much about the stock, the fundamentals. I know 41 million. They've turned over quite a bit. They're a big trader, a massive trader. If we go down to, I don't know where they are on the index, what number? Oh, anyway. If we just look at, I want to go back to the weekly. I might have to just go on. I like Newcrest. There's a couple of reasons. You can see this contraction here is quite clear. This could take a while, but look at that monthly contraction. It's had that little run on through 2016, a little spike up to 28. I don't mind that. We're still holding higher levels. We're just grinding out. Anyone that's buying it a bit early potentially is getting grinded back out of the market. But all this is in context. This is in context of this more of this push back up off the $10 zone. But look, also what we talk about the MAs. So you've got, press above. We pull back to the MAs. We kept holding the MAs. This was probably a bit rare, and that was the GFC. Don't forget. So we got smashed through the MA, bang, straight back up. Held the MAs until we got sold off in 2011. Sold pretty heavily, smashed down from 40 bucks down to 10 bucks. All right. So I don't know what they're probably a fundamental reason for that, but you can see we want to see this type of action when it keeps touching on the MAs and lifting and lifting and lifting. We can drop our, this is a monthly chart, but if we're looking at this as a weekly chart, sitting on top of the MAs, and we're just looking down to a daily for an entry. Confirmation that buyers are stepping in, we want to jump in, take part, hold our stops below a high low. The market's starting to squeeze up. We're going to start dragging in more buyers, and away we go. So this also is potentially sitting on top of the MAs for the monthly, you really longer term trade. The stochastics look like they're in a good, that's that W pattern on the stochastics. They're starting to hold up in that overbought territory. So maybe we're getting some around this zone. I mean, it's quite a wide zone. Don't forget, around 18, 19 up to 22, $3 range, where it could just hold up and start to lift. So if we go down to our weekly charts to see what it's saying, we still got, for me, you've got a key level. This price, we got price action kicked up hard, big contraction. It's still holding higher lows, and it's really this zone for me at $19 is a higher low as well. So if we draw that up, actually, no, I'll just draw it up here. So you got a zone through here, pretty much. And I don't mind the fact that we flushed out. So you can touch it 1, 2, 3. This time we washed out and we've rejected. So for the key level for me, just off the weekly chart purely, is that 2250 zone. It is still struggling a bit. You can see it's gone from oversold to overbought, potentially holding a lower high. This could come back down now. If it comes back down and touches that without the washout, like we got the washout there, if we come back down and retest or even hold a high low, maybe at 20, who knows? Then I think this could show some good signs. We just want to make sure, as we're looking to buy into it, is that the selling pressure has abated and the selling's gone. Anyone who wants to sell has finished selling, and we're starting to get that lift back in the stock. Probably a lot of work to do, but I've really been watching this, and it's obviously been watched for quite a while now. I think we've had a nibble at this a couple of times. I'm not sure whether we took a small loss, a small gain, or what happened. I think it was a couple of trades, maybe a break-even trade, who knows. But yeah, even if it's a breakthrough that high, I'm still looking at that bigger picture contraction. So I guess if you get into the daily chart, you'll see this is a high low. We can press up, you buy on the break, it goes about 10 cents and turns around and reverses and stops you out, which could easily happen. You just be aware it happened back here. You know, you got your high low here, washed it out, held that level, bang, straight back down again and found selling pressure. So it's still got quite a bit of selling, but the fact that it's held up at this 19 to 1950, or say 19 for a few times now, um, it could be showing some good signs, but we'll have to keep an eye on that one. I just like that weekly chart. But ideally, I want to see that lift, even if it trades to 2250, pops its head above 2250, and then we get a bit of contraction back into the zone, and then start to look for some short term. That didn't really look. It's a horrible looking picture. If we get this type of action, we'll go to a different color, blue. We start to pull back into the, we go up through 2250. This is 2250 here. Contract back below, and then we're looking for a major high low, and this contraction is all part of a major high low building, and then see if we can start sitting on the MAs are starting to pop up. So I'm guessing if they do pop up to 2250 now, I think the MA is going to cross up. That's your first sort of reversion to the mean on your weekly. The MAs are up, we're pulling back, it's your first pullback, and then you're looking for that cross back up. And really, I always draw this up because this would be my ideal scenario. Exactly, and I know where I'm going to put my risk. There's your breakout there, there's your risk, and away you go. And then you're looking for this leg up. This is your secondary leg up, which could take us right back to 26 to 20. Got a few levels, 25, who knows? But there could be some fat in this trade on the upside, assuming that it plays out. But the first part of this puzzle is really to pop up to 2250 or so. And then all this contraction, we could be starting to lift from there, and we're coming out of this contraction, which is a long time in the making. But if you go into the daily, I mean, this may look like, and I'm guessing this is going to sucker on a few trades, but all in context of that resistance zone, we're still just below that resistance zone on the weekly. So it could have suckered in a few buys above 2150, which the way it's reversing is exactly what it's done. I'm guessing it got through this high too, high 2156, 44 was it? 63. Okay, so we've got 60, high 56. So it's just got through. Today it's opened up, traded through this high and the previous high, and now it seems to be reversing in on itself. So for me, that could just be a flush. We may come back down, and we may still chop around on the daily even, but just be wary. It's one just to keep an eye on, I'd say, for now. Any more questions? Got anything else we want to take a look at? Throw something at me, and we'll see what we got. So that's Newcrest. I don't really see too many others. GOR, Gold Road, I'm always a favour of that. I just don't like the way it's pressed down here, popped up, your lower high. We're right at 60. If it doesn't hold 60, it's going to go straight through. That chart doesn't look, for me, very friendly. That's that reversion to the mean on the weekly. MA's crossed down, come back up. That's your first pullback. So theoretically, or technically, we should measure this leg from highs to lows, take it from around, say, 72, take out the low, could take us somewhere to around 50. 60 to 80. So yeah, you're looking, say, 75 down around 50. You could be looking around 50 on a move down, if that's the case. All right. Peter. Yeah. Okay. Um, so that's Gold Road. Nothing too flash there. So you can see, even though gold's, the last couple of sessions have been up, gold in Aussie dollar terms is pressed higher. So the last couple of days is going to drag in some buyers, because there's always going to be people who see the last couple of days of strength. They don't want to miss out. But what it could just be doing is flushing people out either side of the market. And just by going through those, it's just a few of them that I've got on my list. There's probably quite a few. Look at Perseus too. You know, Technically, they're not looking. I mean, that monthly is down. Okay, the weekly, this could be that reversion. We could be pressing through the lows at 32.5. This is Perseus, by the way, PRU, and trading down to 30 or trading lower. You just don't know what's going to happen. You don't want to second guess it here. You want to see it lift and then buy into a pullback. Um, yes, none of them really longer term are looking that great on the stocks. I mean, could be wrong. They could lift. Who knows what's going to happen? But the way I look at things, and they're all up today. It's going to drag in some buys, but it could just as easily turn around the next couple of days and flush them straight back out. Don't forget we had a 500-point down day on Friday, 5 or so on the Dow. Probably going to be a bounce, maybe going to be a bounce today, maybe not, maybe the next few days. And if it bounces, gold's probably going to drop off, maybe. US dollar might rally, put pressure on gold and the Aussie. US dollar might drop further. We'll just have to see how it goes. Yeah, I wouldn't be confident just by looking at some of these stocks. If you're looking at gold as a buy longer term, yeah, these ones I think they've got a lot more work to do for me to start jumping in and not really getting ahead of themselves at all. It's not a bull run in gold for sure, just probably a random movement. All right, Gino, we'll look at that, mate. So for us, we've got two positions, RFF, which is giving me the irrits at the moment. I keep wanting to see it through that 226, and it's struggling. A big sell-off a few days ago, straight back up the next day, but struggles at 226. It is weekly. I do like that, and I really do think it's going to hold those low at 217. We're going to stop at 215. If we don't, okay, we're out. And this could be that perfect scenario, like we were just saying. This is contractive price action. This is rural funds. So we've got markets up, gone into contraction, held through that $1.95, $2, started to lift. This is just sort of first pullback, so it's going to be maybe it's still got a bit of depth to it. It's a 50% move from this move up, pull back to the MAs. Still a bit choppy, started to lift. So if we start finding buying support above, we don't go through the MAs again or retest down to 210, we start lifting on the weekly, then I'm going to be bullish on this. Well, we're already in it, but I think this one could be a really goer. Get up through 230, start attacking 240, and up she goes. But at the moment, it's the overall market that's just dragging this lower. There's no serious selling pressure. It's not massive. It's running, it's a bit dry at the moment in the way of volume, which could easily tick it on the downside and stop us out. But, the price action's still there. Everything's still looking good, even in a really, for lack of a better term, crappy market at the moment on the ASX. It's still holding up okay, and that weekly chart still looks good. Nothing's broken. Now, obviously, if it turns around and heads higher, then we could be on a good thing. It could really start to, if we get a good bounce in the ASX, it could be time for this one to lift. We just have to wait and see. Triple T, Titomic, it's come under pressure as well. It got smacked down the last couple of days. Actually, more than likely not. It was just on Friday. Knocked on the head, holding up at 2. We're going to stop below 180, just below the structure point. That on the daily still lifting. It's just correcting. Maybe this is going to be a pullback. Maybe this is going to be a massive sell-off from here, or maybe it's just reverting to that daily MAs as well, starting to lift. The problem is a lot of these stocks, which would normally probably lift, are finding selling pressure because everyone, if you're bullish on it fundamentally or not, I think there's going to be a lot of fundamental traders that think it could be undervalued, but watching the overall market going, look, I can't hurt if I stand aside. If this market looks, look, we're down 114 at the moment on the ASX. So a lot of this is real fear starting to drive the market lower. Even if something's perfect, it still could keep a lot of people, buyers who would normally buy it in that sort of setup, or whether it's fundamental or technical, keep them on the sidelines. So anyone else who's technically looks great and holding position may look to go, look, I'm just going to take it off for no particular reason, but they're getting nervous, they're getting scared of the overall market. Does that make sense? So when fear drives things, it could sort of blow apart any fundamental reason to hold, blows apart any technical reason to hold, because the fear is driving the market. People just want to be out. They feel safe on the sidelines, which is fine. But that's what could, we could get stopped out on these soon. Who knows? We're going to take a hit, but if it's going to take a hit on those, then I think the overall market's going to continue to take a big hit. But we'll see. All right, what do we got? Zip. Let's have a look at Zip. Would love to see these two pop up in the close, just because of my ego. So Z1P, Zipco. Juno. All right, mate. So this is the way I'd be viewing this one. If it's bullish, and if you're not into it, I'll be looking for it to hold up pretty much here. And it's just what we've been discussing, at reversion to the mean. Let's just draw that. It hasn't just yet, but you can see what I'm talking about. This type of trade off here, not so much obviously it capitulated there, then you started. This would have been hard because of that move through and back up again. Maybe this move was a bit better because it started chopping up. Spent a few weeks, I'm on a week, I'm on a day, a few days just holding there. It lifted from there. But this big flush here, so this big flush out, it's taken a few of these buyers, previous buyers, straight back out of the market. And of course, at this stage, when you're up at these highs, you just got through one high there, and you're sort of up into another zone where you're stretched. Good pullback, you're stretched back up there. You're probably going to find there's going to be a bit of selling. That would have been probably about the time the market took a bit of a beating. So, bit of a bath. There's going to be that fear that if you're holding on to gains and zip and you see the market start to roll over, you probably want to take it pretty quick. So that's probably what's driven the market through, a support zone, the higher low in here, and it's brought us right back into, that's your key low, probably on the weekly. Probably not, actually. We can tracked it all the way back down to 90, started to hold up. You can see that big push down, I would say. Pop back up, pull back, took out this most recent lower high, pull back, built your high low in here. So you could have been looking for an entry there, but it's going to be a tough one because it's below the MA still, and it's a bit aggressive. Now, in saying all that, that's your first pop up, and you can see the way it got ahead of itself back above $1.10. So this is your first sort of pullback when the MA is across back up again. So it could be, if we go back down, I'm sure this is that's a daily. From here, if this is going to hold up, you want to see it pop back up. So probably take out the previous couple of days highs. You want to see it pop back up and then maybe get the little minor high low and then off you go. And then buy when it's starting to rise. But it has to show signs. At the moment, the last few days have been down into this zone. There's nothing to say it can't keep heading south and do this type of action straight back through. Then we hold just a deeper pullback before we get that bounce off the MAs. Does that make sense, So yeah, no, have it on your watch list because there's no reason why it can't just hold up here. And if it starts to lift, it might be worth it. If you don't buy before, break out on 112, for instance, which I'd find that hard, and having my risk below 102.5, that's 10% risk. I wouldn't really do that. I'd be looking, I want to see some inside action. By inside action, so we'll just draw this in a different color. This is the leg up we're looking. This is the pullback we're looking at. Leg up, pullback. I want to see something like this, a bit of chop maybe, bit of action like that. So it holds some minor high lows, but it's just contracted, and then you can buy on the break. It just means your risk is a lot lower. Some volatility's come out of the market, and when it expands, it's going to drag in some more buyers that could be watching it. We get this type of scenario rather than, press up, pull back, buy on that break there, and have your wider stop. 1-to-1's only going to take you probably to these highs. That's going to be a tough one to trade. Does that make sense? Yeah, I would ideally like to see that. I could be that I'm very risk adverse, especially in this market. Definitely, it's worth being risk adverse. But yeah, there's a time and a place. If this market was bullish and we're up 100 points, then yeah, this setup, just buying on the break there could be a lot easier. And it's you're going to go 2-to-1. It's just going to be in an uptrend. Everything's looking great. But when you got these setups for buy setups on the upside, when the market overall, the US is getting caned, the Europe's down, we're getting smacked. Asia, everyone's under the pump. I would be leaning towards something like that buy setup, because it just gives you, I guess, a lot lower risk is one thing, but I think your payout ratio is going to be a lot better too. And you're just taking a lot less risky trade. You've got more evidence that this is going to rise, and more evidence for you is also more evidence for others as well, if that makes sense. So, and you've got just more support on the buy side. Let's look at SPK, Spark, Cracker. Been watching this one, but doing nothing. I don't even know if we alerted to this. I think we alerted to this a while ago. Did we alert to this one, Paul? Try to find it. SP. Just want to see what it said. So many charts coming through. Oh, no. That was in August. So this is our last one in August, which is, that's the last alert looking for this type of price action. And I think it played out nicely. What's that week? Well, that's your weekly there. So this move is pullback, was around here. So it did lift. So that price action is about here. So it did lift since then. So yeah, got it right. Just didn't get in. Off the daily, might have been a bit tougher on the daily. You get these sort of pullbacks below the MAs, then bang, up she goes. And it was a real grind up until recently. And it stopped grinding. So longer term, it's probably where you got it, Paul. Nice fundamental trade, I'm guessing. But Spark, SPK, doing nicely, getting ahead of itself at the moment, but no reason why it's going to pull back just because it's getting ahead of itself. Was it 229.5? 295, I'm guessing. Down here. No, I've got that wrong, haven't I? Oh, I'm a goose, mate. 334. Nice. There's Paul's. It looks like he's buying a break just through here. Away we go. Nice little high low in here. All right. Nice work, mate. Nice work. 29th of May. No. Oh, yep, was up here. You hold this for a while. Held it for a while. It's around here somewhere, wasn't it? And sort of pop up. So, no, nice, mate. Nice. All right. What else we got? BHP. Yeah, BHP is a funny one. So yeah, it's got really choppy here, doesn't it? Just go back down to the weekly. For me, it's starting to find a bit of weight. We'll draw this up. We'll just have a swig of coffee. I'll draw this. I don't like you doing that to me. So we're more maybe just concerned. Just take one step back. So that 36 mark, okay, so it's about here. Found a bit of resistance up there. So without even, just did it again. There we go. Like a full screen, not waste any room. So this is BHP. All right. So this is the uptrend, obviously, we're looking at here. That's your uptrend. And there's two ways to look at this. And it's coming from me, I just don't even bother with BHP. There's two ways to look at it. So you've got an uptrend, so you can either buy it off support there if you're convinced that it's going to pop up. We've had a bit of a, but just taking a step back, you're looking at this bigger picture, okay? You're buying off there, you're potentially, we're right here now. We could buy off that support zone there. If I just draw that up, back then we're sort of looking at that resistance there, buying a lift. You'd have to drop it down to your dailies, obviously, just to get a better entry, but potentially buying, that was a tough one. It's always going to be tough for me to buy like that. I probably would buy buying somewhere around here. It's lifted. Could be the same type of thing. We've got contraction in. We've got the lows holding, this longer term trend up, the daily contraction lower. Prices heading south. We're finding some buying around that 30.50 mark, which is just in here, and it's starting to lift. But the problem is we've got this sell-off, which is potentially around 35.50, 36 previous highs, and that was back from our. We just go back, looking in here. You can see it's one back up, found some selling support, selling resistance up around 36, big leg lower. We've retraced back basically a V-shaped recovery here, straight back up to 36. So anyone that's been buying, if you happen to be just buying in here, buying in here, buying in here, you might start to just just start to think twice about what's happening up here. Not saying this is purely a technical. What we're trying to do here is purely plan for what action, if we see this type of scenario play out, what are we going to do? If we see this type of scenario play out, what are we going to do? And if we start lifting from here, and say it's touched on, because don't forget, I'll draw that as two different colors. Green, there we go. So that's our green support there, green support there. So we've got two scenarios, one bullish and bearish. Okay. So the bullish is longer term buy. We're in that zone here, starting to lift. You can see the market sort of pressed down, and it's touched 1, 2, wash out here. Potentially the same sort of thing it did here, wash out, then lift, wash out, accelerate higher. So we've got this type of move, pop up, we've come back down, we washed it out, we just come back up. So if we can get the market lifting from there, and then we get some sort of pullback we can buy into there, yeah, great. And we've got our entry long. And then the first scenario, first sort of resistance zone we're going to be concerned about is up towards 34, 35, 36, up towards those highs. And by taking this entry, your risk is minimal. You're probably going to be up. You're going to have some fat in the trade just before you come into a few problems, potentially. So that way you can break it. It could be a break even or a positive trade. You're not taking too much risk on it. You're going to be buying in the unknown, and everyone else, if they're going to buy it, they're going to buy it and kick it up for you. You don't have to worry about a thing if that's the case. But if there's no buyers up at this zone, no one wants to buy it because there's major resistance zone and there's going to be some major selling to come into it, then you're not going to get hurt too much if you are taking a trade like this scenario. Now, the other one is obviously the bearish scenario. We could just, let's go back to red now. There we go. We could just lift from here and we might get a major, just for instance, we popped up, we might get a big lift and we might get this major lower high coming into play. A major lower high, we do lift, we drag in a few of the bulls, and then we got this resistance. People are not going to wait to 36. They might wait a bit earlier at 34, for instance, and then get sold into again. And that, I would think, is going to break the back of the uptrend. Does that make sense? So if you see this big spike straight up from here, straight up to 34, 34 and a half, I wouldn't go near that with a barge pole on the long side. I'd still be looking for that type of scenario where you've got your high or low come into play, because that could easily lead to some weakness. And then you've got, instead of a bullish scenario, you've got a bearish scenario. You've got potentially your head and shoulders here, shoulder, head, another shoulder to play out off a major lower high. And then that's going to bring in all kinds of selling and all kinds of issues. And then we're probably going to, if we break this longer term uptrend, then yeah, we're going to have a few issues on it. Does that make sense there, guys? Just what we're trying to say. So it may seem a bit neutral because I'm not in it. I've got to think of both sides of the market. What do I want to see play out if I want to get long? What do I want to see it play out if I want to get short? Or, if I just don't want to get long, or if I am long, what don't I want to see play out? Which is obviously this red scenario. If I'm long, what don't I want to see to play out? I don't want to see that. I don't want to see lower highs coming in. I don't want to see selling pressure coming into the market. I'd rather take it off, reassess it, and if I'm wrong, I jump back in. Does that make sense? So you've really got to plan. Try not to be a bull, try not to be a bear. We've said this many times in the past, especially with this kind of market. You just never know. Beautiful. You just never know what's going to happen with China. I mean, two of the biggest country egos in the world, I'd suggest, are fighting it out. Two of the biggest economies. This could go on forever. They're argy-bargy. No one wants to give up ground. No one wants to make too many concessions. They're really minor pissy concessions from China. And then the US keep blowing their trumpet. We're going to do this, we're going to do that, and keep beating the drum and just confusing traders. And if they're going to confuse traders, people are going to want to be out on the sidelines. The less people are going to want to get in, and the more people who have held it are going to want to get out. And then you're going to get this rollover. So yeah, you have to have a scenario. Anytime I'm in a trade, I always want to. I've got it in the back of my mind. What do I want to see just to remain bullish, or what don't I want to see if I may have to tighten up my risk? What do I want to see if I may be adding to a position? What don't I want to see if I just want to close out and take the profit and run? So all these scenarios have to be going through your head, and that's trading, I guess. That's the way you should be trading. I hope that makes sense here, guys. And everyone might have a different scenario. Don't forget, Paul might be trading different to me, who might be trading different to Gino, who might be trading different to Helen. We all trade differently, but as long as you consistently you've got your edge, you're consistently putting that into play, and you're consistently looking at the market, analyzing, because every day you've got a bit more data coming into play, to assess. Don't just assess it, think you're right, and away you go and forget about it. Keep assessing it as you go. A bit more data coming in. Okay, has that changed the picture? No, it hasn't. Yes, it has. And then, yeah, just reassessing it as you go. Being on the front foot, I guess, is the thing. So this daily just doesn't look strong to me, but you look at that, just that weekly, the stochastics in oversold. There's, we could just pop up through, what is that high, 32.18, 32.20. Got a little minor higher low in play on the daily, but the daily is a bit extended on the upside. So I'd rather see it chop around before that plays out and bring the stochastics down to sort of that oversold zone. And then you've got weekly oversold, daily get into oversold, and it starts to lift. You probably could have a real short-term trade, lift back up to 34. All right. Just got my little fella coming in, barging in. No respect for my rules. Anyway, guys, we'll probably call it a day there. Let's see how we go. Let's just see what the ASX is doing. Look, it's not looking pretty. We have to see how it comes into the close. We've still got a few hours left of the session, but yeah, if you got positions long, just know where your risk is. If you're short, congrats, especially if they're heading south. Yeah, but just keep an eye on it and know exactly where your risk is, especially over the coming few days, weeks even. Know exactly where your risk is. What we're going through at the moment is frustrating as hell, but don't forget what's happening now it could, and if it does, the harder it sells off, the better the opportunity to buy in the long run for buying opportunities are going to play out. But just keep your gunpowder dry, keep your money in the bank, and just continually look at the market, assessing which ones. Probably just going through your weekly charts. I wouldn't suggest you'd have to go through your daily charts too much. Look at what stocks look good. What are they saying? What's the fundamentals of them as well? Good solid fundamentals could be undervalued on the weekly. Everything's looking into play. It's just not doing much because the overall weakness in the market. But they're the ones that are going to probably come out first, come out of the doldrums first if this market starts to hold. Maybe the banking sector is going to do well. I don't think it's any. Let's just look at those. I haven't looked at those. No reason to buy them now. They're still, heading south. None of them are having a good day. They're sort of in some resistance zone. That's the weeklies now. ANZ, NAB down on its knees. CBA heading south on the weekly. That's your reversion to the mean. To the MAs, WBC, Westpac heading south. So you've got time there as well on the banks. Anyway, guys, we'll call it a day. Thanks very much for joining me. And just remember, what I'll do for anyone that's in TradeSetup and gets the app, we'll send out an alert. Obviously, with Christmas coming up, I'll have my 2 weeks holidays. But it'll be probably what's Friday, was it 21st? 21st, I think, Friday the 21st. We'll probably knock it on the head there for the 2 weeks following. It takes you into the beginning of the new year. So there won't be too many alerts coming out. There might be some management alerts. I might send the occasional one out if I'm feeling good on my holidays, if I'm feeling enthusiastic. I think it's a good time to take some breaks. If anything untowards happens, I might send out some alerts. If the market's still under pressure, I'll still send out some alerts. But anyone that's not following that and that just joins in the stream, just remember we probably won't be having the stream over those 2 weeks. And we're also going to be looking to wind it down to one, or potentially one, just on the Monday, and cutting out the Thursday stream, probably into the new year anyway. But yeah, just remember, if you do, it'd be much appreciated if you like what you see. It'd be great if you could share and like the videos, like anything we do. And then, yeah, we'll see how we go on the coming couple of weeks. And remember, just stay safe in this market. Cheers, guys. I'll speak to you Thursday. Bye.